All right, well, to take us through that result from HUB24, we're joined by Chief Executive Andrew Alcock. Andrew, good to see you.
Thank you for having me on.
How pleased are you with the results?
I'm really pleased with the result. It's great to be working in a business that's actually achieving great results and good things for customers and shareholders.
And do you see that growth continuing, given that interest in the market that we're seeing at the moment?
I think it will continue. I think the trends we've got in the marketplace in terms of advice moving around and in terms of the move towards specialist platforms like ourselves and our commitment to growth and delivery, I think you'll see that continue. I think it's just the start.
A lot of this has come off the back of some acquisitions you made. How important have they been over the past few months?
Oh, the acquisitions are very important strategically, but the underlying flow growth you're seeing is in the core HUB24 business. So the $1.9 billion of flows for the quarter, which is the record, up again from a record the quarter previously, is the core business. Those acquisitions are about broadening our customer base, finding new opportunities and increasing our scope of services to the market.
And is that likely to continue when you talk about those new opportunities? Given the current market at the moment, there are so many new players entering into it. Is it necessary to undertake further acquisitions?
I don't think it's necessary at all. Our view on the acquisitions was about how could we offer more services and increase our footprint and do sensible acquisitions that we could monetize. So we'll look around for other opportunities, but we're not doing that because we need to. I think that there's less competition in the market right now. You've got new players starting up, but you've got the exit of the banks and the institutions. So we find ourselves as ranked as the #1 product in the marketplace and having the second highest flows. I think it's a good position to be in.
Yeah, I guess I was more sort of looking at the fact that, as you say, the big banks looking at leaving that sector, but you're getting a lot of fintechs sort of, you know, sniffing around, seeing an opportunity there, aren't you not?
Look, fintechs may have point solutions. We are a fintech. We've done that ourselves, and our attitude is to keep disrupting. So the focus for us is to disrupt ourselves, and we do that. Some of these acquisitions will help us with that in terms of building what we call non-custodial admin services. They're different to our core business, but we see that blurring in the future. And so our attitude is do it yourself.
Yeah, so how does innovation and technology play into that? What sort of products are you looking at?
Look, I think the core for us is we've used technology to unlock value for consumers and advisors and therefore for shareholders, and we're not done yet. There's more to do. So you look at models like Robinhood in the States, you look at the way managed portfolios work versus managed funds. There's a lot more innovation that's delivering that value where rather than a platform just administering assets and providing a tax report, we actually create alpha or I suppose extra earnings for consumers with good advice. So that's what I think is the key here, and there's more to do. This industry is just starting to have a revolution, which I think we're partly leading, and there's more to go.
Yeah, given that interest from the Robinhood traders, are you seeing a younger demographic come to your platform?
Not in our target market at the moment, but you look at what's happening there and you see how technology is being used to tip it on its head. That's what we've been doing in the marketplace where people have a nest egg large enough to see advice. So we're largely intermediated. But we do look at those things to say what could we learn from that to acquire younger customers over time. It's very interesting.
Are you looking at other markets at this point?
Not geographically. We're certainly looking at high net wealth and high net worth markets. Part of the acquisition of Xplore is to provide overseas domiciled investments that we can actually bring to Australia. So we're looking at broadening out our capability, if you like, from a core manufacturing capability up the curve to higher balance clients and private wealth clients, and also to simpler clients as well, to those who want access to advice but find it more difficult to get. So we're broadening out in both directions.
You're obviously benefiting from current market conditions. We've seen so many investors come into the market, for instance, seeking advice, perhaps where advice has been lacking, because we've seen a lot of the big players pull back the number of advisors there. Do you see those conditions persisting, or do you see any particular risks ahead?
Look, I think Australia has to think about advice and the availability of advice. The stats say the demand is increasing, the supply is shrinking. We've had institutions leave that marketplace, and to some extent the investment in technology and solutions has disappeared. And so there is an opportunity for fintechs and companies like HUB24 to fill that gap, so we do create that opportunity. Otherwise there is a risk. So hence our program of work is about enabling advice, investing in technology to make it easier and cheaper for advisors and consumers, and we owe that to our population. The industry's been left largely in tatters by what's happened. The new breed has to stand up and be counted, and that's what we're about. So there's a risk there, but I see it as an opportunity for a smart fintech to capitalise on, which is certainly our intention.
Yeah, how do you see the regulatory framework that we currently see in? Is there any Anything that needs changing in your mind?
Look, we've had ongoing regulatory change. I think it keeps happening. I see it as an opportunity. If it's aimed at consumer protection and education, how can that be a bad thing?
Yep.
I think that there is a whole lot of work required in advice practices to deliver advice, and that's because technology hasn't been invested in. So I'd sum it up as, for advice and platforms, the regulatory framework has been about detection rather than prevention. We've done audits at the end of the year on advisors and found things that were wrong and looked deeper, but we should prevent those issues from happening in the first place. So data and technology has to be able to do that, and that's what we're about.
Do you think there is a sector in the market, and I guess I'm pointing to new investors, particularly millennials,
Yeah.
who have bypassed the advice stage and just got directly into there, and perhaps they're suffering or will suffer as a result?
Look, I think millennials didn't seek advice, or that age group didn't seek advice typically anyway. People in Australia sought advice late 40s, early 50s, approaching retirement. I've got a nest egg, I've got my own super, and I have to be self-funded. It's a phenomenon of the last generation or so. So typically they haven't sought advice, but I certainly think there's a place for technology to help with that and to educate, and that's what they're doing with services like Robinhood, and that's what we'll look at doing in the marketplace as well. If you can educate people about financial literacy early, then the benefits of advice will be greater later on.
Yeah, and just quickly on the super front, there are some regulatory changes there afoot as well, just as far as what the government's proposed. Does that affect you at all?
Typically doesn't affect us. Our business, because of the type of market we're in, the type of clients, they're thinking about their future and they're investing anyway. So if you look at the release of super during COVID and how much money went back to people because they could get the $10,000, it hardly turned the dial for us. It was a small amount, and that's the demographic.
All right, Andrew, terrific that you can come in and explain that. Thanks for joining us from HUB24.
Thank you.